We have Tim Milazzo with us here today, and Tim is a co-founder and CEO of probably the fastest growing online commercial lending platform I think I've run into so far. I mean, this is pretty remarkable, especially in the amount of time that you guys have pulled this off, because we're talking about $1 billion in transactions at this point already. And you can go and find their website at stacksource.com. I'll make sure to have that link in the show notes. But Tim, is there any place else you'd like them to reach out to you?
Well, I'm happy to receive emails from anybody in the real estate space or interested in prop tech or any of that. And my direct email address is tim@stacksource.com.
So let's start things off here a little bit. You know, you're one of the co-founders. What made you decide to tackle this type of project?
Yeah, Jack, my interest in real estate started around the dinner table growing up because my dad was in the commercial real estate industry in New York City. And so he was commuting from New Jersey. And so we were in a nice suburban neighborhood in New Jersey. Later, when I was studying finance in college, I got an internship at a big real estate services firm in New York. And what I really loved about real estate, and specifically like commercial real estate, was that the people involved in it were kind of building the future, right? Like we're the skylines and the buildings and, the way that cities would operate and the buildings in them. And that was really interesting. But I didn't go into real estate right away. So I was studying finance and I was interning in financial services and in real estate. And I was really enamored with what was happening also in software and technology, building the future in an entirely different way. One that was built with code and built on computers and with automation. And it took a few years into my career as I was in advertising technology to bridge those two things together and say, hey, at the intersection of real estate and technology, talk about building the future and an interesting an opportunity. And so real estate tech was how I began to work full-time in a full-time capacity in the real estate industry, was through founding StackSource.
Sure. This is just kind of interesting to me because I think I can put probably realtors and brokerages and stuff into this category as well, because I think real estate, we're a bit behind the times regarding technology in this space.
I think there's a defensible piece of that, and then there's a true piece of that. So there's the defensible piece is you put a building into the ground, whether it's a home or an office building, that building's going to be there, or it's designed to be there for a long time, right? And so decisions about real estate and developing of it and acquisitions, they're decisions to take your time and do it right. And there are other areas of the economy and companies and the way, interactions of our daily life that are much smaller and much more ephemeral, and they need to be quicker and more efficient. And now the defensible part is these buildings are going to be here a long time and they're mainstays. But you're right in that the services of real estate, whether it's buying or selling a home, whether it is finding financing options, and that's where I play in the commercial financing options space, and or whether it's your operations of your property, the way you collect rent or run your property, or novel ways to increase the income at your property, there are a lot of opportunities to innovate. And it may take some time to get them implemented in a portfolio or to use them, but there's a huge amount of opportunities for efficiencies. And there's also a huge amount of opportunities to use data to your advantage as a player in the real estate industry. And I think because there's a little bit of a slower adoption and there's been less traditionally spending on research and development, R&D, in the real estate industry than there have in any other major industry. And that's an opportunity as much as it is a threat.
Sure. So let's talk a little bit about what your company does exactly. When I went to your website, it almost kind of looked like one of those places where it allows a person to submit one application and get sourced, like Policy Genius, a few of those. I've typically seen this type of model in like the insurance industry. It's kind of refreshing to see it in a lending industry like this.
Yeah. So we play in the commercial financing space, commercial mortgages. And this has actually happened in larger degree on the residential side already, where In 2021, I think Rocket Mortgage originated like 1 out of every 11 residential mortgage loans across the United States. Mm-hmm. And that's an enormous market share for one company to have, considering the thousands of banks and credit unions and the thousands of residential mortgage brokers that would like to be the person that gets you to your loan. For one company to take like 1 out of every 11 originations is testament to the fact that in financial services, the expectations of, I want to know what my rates and what my options are right now. I want to be able to close online. I want to be able to work. Do I want to be able to talk to a person? Yes, sure. And I want to be able to talk to an expert, but I also want control over the process myself. I've got the document. I can upload it to the portal. I can find out what my mortgage options would be if I change the numbers. That's what people want. And that's happened more slowly in the commercial mortgage space. And so the reason for the existence of StackSource, or what we're going after, is provide a very simple and transparent way to figure out your commercial financing options if you're in multifamily or commercial real estate.
Sure. And a lot of people, up until now, we typically have run into a lot of real estate investing gurus, if you will, that talk about and tell you to focus on your local market and some of the smaller bankers. I would imagine that this is kind of taking a different approach regarding that type of outreach. How does that work?
We actually have a lot of banks and credit unions across the country plugged into the StackSource platform. So StackSource is not a direct lender for commercial mortgages. What we've done is we've aggregated about 1,000 different lenders across the country: banks, credit unions, private debt funds, and then of course the big national, financing options that you might expect, like Fannie Mae and Freddie Mac for multifamily, and the commercial mortgage-backed securities market for major banks, and where there's only a few power players. But actually, a large part of our network is these local to regional banks and credit unions. And while it's great to be able to know, hey, Bob at XYZ regional bank is someone I know. He trusts me. He's going to be responsive, and he's going to give me good term sheets when I'm financing something in his arena. Things change quickly, and you may not be working on the same types of deals every single day. And how do you know that just because Bob is responsive to you and you have a good relationship, is Bob's credit committee going to be as aggressive as the credit committee behind Jim at some other bank that you haven't talked to? And that's really the problem for commercial real estate investors and multifamily real estate investors, is there's not one underwriting box that all these banks, credit unions, and various types of lenders are underwriting to. They each control their own credit policies and their own commercial underwriting standards. And that's not the loan officer you're talking to. There's a credit committee and a chief credit officer that's giving them parameters that they have to work with. So for our system to understand the credit parameters that each institution's working with, the idea is getting competitive offers from multiple institutions is generally superior than one name that even if you have a good relationship.
Sure. No, this is just really interesting because it kind of goes against a lot of what we've heard, especially, like I said, from the gurus. It's interesting that you've been able to plug in so many, what I would see as smaller banks into your system, including credit unions. Or do you find that it's pretty easy to sell this concept to these smaller banks?
That's a good question to ask. And the answer at the beginning was absolutely not. It was not easy to sell the concept to banks and credit unions. So when we were launching our platform, which is now back in 2017, and the team at that time was pretty bare bones. It was myself and a couple of software engineers with a prototype that we were looking to launch and run some transactions, learn from them, and learn, okay, how much more do we need to build? What features should we be building next? It was very much like a taped together type of prototype where we had a few small loan leads. And to get ready for our launch day, I called over 100 lenders, and 20 of them joined our platform for the first launch day. And the ones that were saying no were the more conservative banks and credit unions, and frankly, like the lenders with better rates and the lenders with better terms, and they had better borrower relationships and more borrower relationships than they knew what to do with. So it was very hard to break into that crowd of the best financing options and the lowest rates. And so I'd learned pretty early on, Jack, to actually shut up about the concept, about the technology and how much we're going to be sending them in commercial deal flow someday, and just wait until we had something. If we didn't know their credit box yet and they hadn't been onboarded to our platform, at least something close. Hey, here's something one county over from you. We have an online lead for this right now. Let's talk more about those parameters because I have a lead. Is this a fit for you? And rather than in the early days playing up the concept, we kind of just acted as brokers for a while and said, hey, this is a deal. Are you interested in this deal? And that would help us get the initial traction and help us to get the initial platform set up. When these days, when we've got, billions of dollars of leads flowing through our platform for people looking for commercial mortgages, those banks are calling us.
Sure. Well, let's take on the lender, on the person who's looking for the capital side of things. How small of a project are we talking about that can be done through your platform versus how large can a person go?
Oh, sure. Well, so I'll tell you the actual minimum and maximum from last year. The smallest loan that we arranged in 2021 was $130,000 for someone to acquire a local 2-tenant retail building. And they had, mom and pop tenants, and the building was old and Class C. And they needed $130,000 to get their acquisition put together. The largest loan that we arranged on the platform last year was nearly $60 million for a major student housing tower construction project in Texas. And we actually have larger loans than that in our pipeline now on the StackSource platform. So it's been all over the place. The first 150 loans we did were all sub $5 million as we were getting the platform running and really helping borrowers that didn't have too many other people to turn to. Commercial mortgage brokers, traditional ones that don't have the technology that we have and the efficiency we have, don't tend to help the smallest borrowers in the market because their time is their money and they do everything manually. They're building a package about deals in a PDF and they're trying to think about lenders they can send it to, and then they're on the phone with lenders explaining the package to them. And we've been able to make our process more efficient in a way we can help smaller borrowers. But we've been very happy to be able to help some larger deals over to the finish line now as well.
Sure. So let's talk about the type of projects then. Are you talking about can people use your platform for fix and flips, strictly rental properties? You already mentioned commercial properties. So what are we looking at for that type of project?
The only thing we don't do, and we're not licensed to do, and we're not attacking that part of the market, is less than 5 units of residential. So if it's a fix and flip or if it's a single family rental, that wouldn't be us. We wouldn't be able to help in that regard. If you get to 5 units, either in the property, like a 6-unit multifamily, or at least 5 units, or if it's a rental portfolio of at least 5 doors that you want to refinance, those are both supported on our platform. And then any type of commercial asset, retail, industrial, other flavors of multifamily, like the student housing I mentioned, or senior housing, office. The office is in a tough spot in the capital markets right now. So anything else that is, commercial, or if it's residential, at least 5 doors. Sure.
No, that makes a lot of sense. So if somebody goes to your platform, like what information would they need to provide, and what are the qualifications somebody would have to have in order to get into this?
Yeah. Okay. So property address is the first and most important thing that we need to understand what type of financing is going to be matching, and then whether you qualify for matching financing programs. So in residential, if you were to buy a home, or if you're going to use a residential mortgage to buy an investment property of 1 to 4 units, it's all about you as the borrower. It's your credit score, your income history, how much money do you have in the bank. In commercial mortgage underwriting, you flip that to being primarily about the property. Now, the borrower's credit picture doesn't matter, but it's the types of things that can disqualify you from a loan. Just because you have great credit and you have a lot of money doesn't mean that you're going to get a commercial mortgage. Getting the commercial mortgage primarily has to do with what type of property is it, and what is your business plan for that property. If it's fully stabilized, if you have a 25-unit apartment complex and 24 of those are occupied by paying tenants, there's there's not too many questions about your business plan. Let's keep 24 units or maybe lease up the 25th. There's not too much question about the value of the property because there's, all the tenants are paying rent. That's a pretty easy scenario to get a commercial mortgage as long as you know what you're doing with that type of property. But if you're talking about construction, value add, dealing with vacancy, dealing with properties that may have various issues to be worked out before they're going to be profitable, that's where it really comes down to not just the borrower's finances, but their track record and their expertise. What skills do you have to make this unprofitable property or slightly profitable property more profitable? And that's really what lenders are looking for on the commercial side. First of all, what is the property? When was it built? What are the characteristics? Where is it? Location being very important. So it's going to be property. Second, it's going to be borrower's track record, especially if it's a value add project or construction. And then third, the final one is the actual borrower's finances.
Sure. So I'm going to touch on something, and you're welcome to answer this or not. But I think it's important for our listeners to understand, how does StackSource make money out of this?
Sure. So we make a percentage fee on the loan amount at closing. So there is no upfront cost to using StackSource to see what lenders you're matched with, to get preliminary underwriting feedback, to get one of our capital advisors to respond and say, hey, this looks like you're actually going to qualify for these financing programs, or here's some idea. And in certain underwriting scenarios, going forward, there will be instant soft quotes on our platform. Not binding, but an instant idea based on the property's location and characteristics and income, what your interest rate and terms are going to look like. All of that doesn't have a cost associated. You're not plugging in a credit card number or stroking StackSource a check. Our economics are built into successfully getting loans closed and funded.
Sure. No, and that makes sense as well. So I'm going to go down, since you're a co-founder and entrepreneur here, we're gonna turn something back on you here. What is the biggest mistake you've made so far in this journey, and what did you learn from it?
I've made my fair share, Jack. So I've made mistakes across multiple pieces of building a business. So this is the first business that I have built. I have worked for some great companies. I've built things inside of companies, but this is the first business that I've built. And so I've had to learn a plethora of lessons. The most painful ones and the most costly ones are when you make people mistakes. So bringing somebody on into a position that they're not well suited to succeed, and you're not well suited to coach them into succeeding, is one of those mistakes that will set you back in terms of money, time, and potentially damage to your company. And so I consider those to be my own personal mistakes. If somebody doesn't succeed in a role that I hire them for, that's because I should have interviewed better. I should have done more digging. I should have set them up in a different type of role or asked them to achieve different goals. And whenever you have someone fail at your company, that's a person, that's the leader's mistake. And so those have been the most, I have purposely gotten, I've learned more and hopefully gotten better at the interview process, in setting up roles with the right expectations, sourcing the right types of candidates, being patient to find the right candidate. So we had an important role that was open at StackSource that we opened last summer, and we only just hired the person last month. And now, if your listeners are listening later, in early 2022, and it was the right thing to leave that role open for months, even though that's painful and we needed the work to be done and we had to pitch in and get it. But hiring the wrong person is more painful for them and for you and for the company than leaving it open a little bit longer and being more patient to find the right person.
On the flip side of that coin, I'd have to imagine that part of this type of business, it's pretty rewarding to actually help with individuals meet their investment goals. Like, tell me a situation where you've gotten some feedback from a particular investor in that regard.
That is one of the most rewarding things, is to help a client close on their real estate transaction, boost their returns, get them a better interest rate than they were able to get from another financing source, and how that helps them make more money. So I'll give you two quick ones. One, we had a borrower tell us after we successfully sourced, terms of an acceptable loan and a good loan for him to acquire a multifamily property. We had the right terms for him in 2 days on our platform. He told us then that it was the most amazing thing because he had called 41 different lenders before coming. And there were some issues with the property. There was some credit. There were some issues that led up to, not every deal are you going to strike out 41 times in a row. That's going to be rare, but it can happen. And in this case, it did happen. And to source a loan for someone in a couple of days that they made over 40 phone calls for was one cool opportunity. Another one is another multifamily investor that started working on his multifamily business and his brand and all of that on the side with his W-2 job, and was killing himself, going crazy, working the W-2 job and investing on the side. And not everybody's goal, but this person's goal was to be a full-time real estate investor. And so we helped him refinance a property that he had bought, get a much better interest rate, much lower monthly payments. And it was a key part of him being able to quit his W-2 job and become a full-time real estate investor and have a bit of it. Now he's part of a team of 3, and they're working on, finding and analyzing deals. And so that was another hugely rewarding to see the impact for somebody being able to quit their W-2 job, which was a years-long goal. And was our refinancing the only piece? No, he had done so much more work on that, but our refinancing was a piece that boosted his cash flow by hundreds of dollars a month into his pocket, as well as, his co-investors making more money each month as well. And that was very rewarding.
Well, you're in the technology industry. Things are progresses extremely fast. What's the next stop? What are you guys working on now?
So we're increasing the coverage on our platform, which is pretty low today, honestly, of loan scenarios where you can get an instant soft quote. So for most loan scenarios in commercial and multifamily real estate, rather than getting an instant quote, you're going to get matched with different capital sources, but your underwriting needs to be reviewed and approved and then reviewed by these capital sources and then quoted back. And the process is more efficient than traditional brokerage, but it's not instant. And so we're working to increase the coverage of different loan scenarios that will have instant quotes on our platform. We also just announced in recent weeks our first larger deal on the platform, where not only did we bring the right lender to the table and get the best loan quote for this investor, but we also introduced them to another equity source that brought additional equity dollars into their deal. And we ended up sourcing more than 85% of the money going into the property, because this investor had some of the equity, but not all. And so we were able to bring a loan and an extra equity investor to the table. And while we're not going to be able to do that for every type of deal, on certain deals in the future, we're going to be excited to productize that more, to say, hey, here are the types of deals that could be matched with additional sources of capital and alternative sources of capital, in addition to lenders that want to make loans on these types of properties.
Yeah, that's an interesting addition. So you're talking about essentially private money associated with that deal.
Yeah, the equity source in this one was a West Coast based, essentially private equity fund that has money in a fund specifically to invest at a preferred equity level in properties of a certain type. And so the property was not on the West Coast. The property was in Texas. And we brought a lender from the East Cost and an preferred equity investor from the West Coast. And so we covered both coasts and the great state of Texas all in this one transaction, being able to stitch those two things together in one deal.
So as a person is taking a look at these options, and you're sourcing a variety of options for them, they might not just have one choice. I mean, they might get back a few options available to them. What are some of the things that they should be looking for to make sure it's a good match?
So there are several things that you can be looking for beyond just, I want a better interest rate when looking at commercial financing options. So yes, interest rate, does it matter to your deal? It can. The lowest interest rate is not always going to be the best loan, though, for a deal. The next thing that is typically looked at is going to be the leverage. So how much is going to be equity versus how much is going to be debt? So if you're on the residential side, you're going to call that equity your down payment, right? And it's typically pretty standardized on the residential side, where based on your credit score and a few other factors, you can tell how much down payment you need to have. But on the commercial side, it varies pretty widely. Needing to bring 20 or 30 or 40% of the deal with your own cash equity is a huge difference to the underwriting of your deal and how much cash flow is going to be. Beyond leverage and understanding leverage constraints and how you get more money and how you get a more bigger loan, the next thing probably is going to be recourse. So if this property goes sideways and there's, we lose tenants or it's mismanaged or, something happens that there's going to be a default on the loan. Am I losing my equity, or am I losing my equity and the lender is telling me I need to pay back the rest of the balance of the loan from my own personal assets? So that would be recourse. If you're responsible to make the lender whole, no matter what, even beyond losing your equity, that would be a full recourse loan. Non-recourse would be, listen, I can lose my equity, I can lose money in this deal, but they're not coming after me for the full loan amount if they take the property back. The property is as much as they can get. So that would be recourse versus non-recourse. And one more would be prepayment penalties. So if I do want to pay down this loan early because I want to reduce my debt, or because I want to sell the property at year 3 instead of year 10 and it's a 10-year term, do I need to pay extra fines and penalties just for paying the loan back early? And on the typical commercial mortgage, there's going to be a prepayment penalty structure. And so understanding that and understanding relatively how flexible is your loan and how flexible does it need to be for the business plan that you have in place? Like, do you want to be able to sell at year 3 versus year 5 or 10? These are some of the very common commercial mortgage, kind of differentiation points. And there can be many more. The more complex your deal is, the more complex the financing structure can be. But those are common ones that, most investors should know if they're getting their first or second commercial or multifamily deal done.
Sure. So how important is it for somebody to have that track record associated with this? Like you've mentioned it kind of briefly a couple times, the second or third deal. Is that a big part of qualifying for some of these mortgages?
It's huge. It's just like getting your first job. How many first jobs say 1 to 2 years experience needed? And you're in this catch-22 saying, well, I don't have any experience, but I need to get a job to get experience, but I need experience to get a job. It's largely the same type of catch-22 conundrum with getting your first commercial mortgage. Lenders don't typically want to be your first lender. Just like employer may not want to be your first employer because there's so much risk associated with it, right? Do they know what they're doing? If there's a problem with a tenant, are they going to know how to handle that? And, they're not here to teach you how to run a property. They're there to invest with not much return. I mean, interest rates are pretty low. They're not getting that much out of it other than their money back and some interest for you to succeed with that property. But they can lose a lot of money if you mess up that property and that, something happens that you can't handle, or you let it go sideways, or you mismanage. So it's kind of understandable to a degree. Now, the way through is a couple of things. One, money can make up for problems sometimes. If you have a huge net worth and you have a lot of money and you have a lot of liquidity, you're reducing the risk somewhat. Congratulations, you're sitting on $5 million of cash because you sold a business or something, and you're trying to buy a $1 million property. Well, maybe that's going to be a full recourse loan and the bank's going to be very comfortable because you've got a lot of cash. That's one way through. If you don't have the cash or the experience, what do? You find a way to get the experience if you don't have the cash. So that can be partnering on your first deal. And that's common, to partner on your first multifamily or commercial deal and to not be the only person signing the loan. If you have a more experienced investor that with a more substantial portfolio and they've been in this for a few years or for a number of years, can you get someone like that to partner with you on the deal? Maybe they invest in it. Maybe they don't even invest in it. They're just going to be an extra person signing the paperwork, and they get a percentage of the profits because they're signing the paperwork. So there are these strategies. Another one would be get a job at a real estate investment firm before starting your own. So those would be like 3 common strategies for how do you break that catch-22. Have money, borrow somebody else's experience, or go get the experience before you buy.
So no, this has been a great conversation. So just to remind everybody, head over to stacksource.com for a lot more information. And what harm does it do if you're looking at this? I know what you're talking about. You mentioned that person who made 40 phone calls and couldn't find somebody to pick that ball up. I mean, that happens actually more than I think a lot of us realize. With that being said, is there a question or a concept that you wish we would have covered here today?
Jack, you've done a great job as an interviewer and helping people to understand these topics. So I appreciate it. Listen, I'm a big fan of tech. I'm a big fan of real estate. We're trying to bring that together. So thanks for letting me chat about it on your show.
Yeah, I hope you'll consider coming back again sometime. I'm just, you can already probably tell, I delved into the entrepreneurial aspect a little bit, and I'm sure that there's a whole episode of mindset and just running a business that we could probably cover.
Yeah, I'd be happy to.